As far as people wanting to work in the UK or Brits who want to work in Europe post the end of the transition period, they are all going to need a work permit, and no exception to this unless they were previously living and working within the EU, or EU nationals working within the UK and who were registered at the time. And there is a grace period up to the 30th of June, within which time those who were in the UK or conversely in Europe at that date will be able to register and will be able to continue to live and work as they did prior to the ending of the transition period. Though we had one interesting case of a contractor who finished in Germany just before the end of the year, and contacted us at the beginning of 2021 and said that I've now decided that I'm going to go to Belgium to work, and I'm going to do this because I can under the Schengen visa. And unfortunately, we had to point out that it wasn't possible, because the Schengen visa is not a work visa. It entitles people to travel for tourist purposes and for business meetings, but you cannot take remunerative work or live in the Schengen area with a Schengen visa. So that if he wanted to work in Belgium, then he would have to apply for a residence or work visa in Belgium in 2021. We've had a number of people coming to us with really not having taken this point about what Schengen meant and what the free movement of people meant. So from 1st of January 2021, a British person cannot work in the EU without a residence and work visa. And similarly, a European national who was not in the UK before the transition date will have to apply for a work visa either under the point system, or when the details are known as to how the new highly skilled knowledge migrant worker is going to work under that scheme. So one interesting thing is that the 90 days that you can spend in the Schengen area is aggregated. In other words, you can't spend 90 days in France and then go and spend 90 days in Italy. You can spend 90 days in Italy and France or wherever else it may be in the Schengen area within any given 180-day period. However, there are EU countries that are not part of Schengen, and they are Bulgaria, Romania, Ireland, Cyprus, and Croatia. Of course, the UK was never within the Schengen. And there you can spend 90 days within any 180-day period per country. So this is an important fact to watch, because, and we'll come on to this later when we start talking about nomadic workers in the EU. We were asked by some clients, can you please tell us, could you run a seminar even, on the changes in taxation resulting from Brexit? And what we said was that this was going to be a very, very short webinar indeed, because there have been virtually no changes in the taxation as a result of Brexit. And the reason for this is that the double tax treaties which exist are all bilateral agreements. In other words, they are agreements, in the case of the UK tax treaties, between the UK and the tax authorities in the other country with which Britain is contracting. So, for example, you'll have the EU-French double tax treaty or the Germany-UK tax treaty. And these are not EU-wide. There's no harmonization of taxation yet at the, within the EU. And so all these agreements, many of which go back for very many years, many times with revisions, but these double tax treaties still remain in place. They're unchanged. And that means the taxation of individuals working in within the two countries bound by the treaty has not had any change as a result of Brexit. This means that you can still rely on the double tax treaties. What we find from quite a lot of people is a kind of prejudice against using a double tax treaty. That shouldn't exist, because the double tax treaty is there for two purposes. One is to make sure that no one escapes taxation when they shouldn't. And the second is to make sure that a taxpayer doesn't suffer tax twice on the same income. But what the double tax treaties do is they do say who has first bite of the tax cherry. And you also need to bear in mind that when there is a difference between domestic law and international tax, what's in the double tax treaty, the double tax treaty prevails. So it's very important not to say, well, we don't care what the double tax treaty says, but it's very important to understand what the provisions are and follow them, because that is the correct and proper treatment with respect to where the taxes are due and should be paid. If anyone's got any questions while I'm talking, please flag them up, and be only too glad to try to tackle them for you. Now, on the Social Security, prior to the final agreement reached in December, and based on what was in the withdrawal agreement, it seemed very likely that the Social Security treaties, the European Protocol, would actually be would be ending, and it would not be possible for people to use and rely on an A1 if they were a British person wanting to work in the EU, or they were an EU person wanting to work in the UK. That has proven not to be the case. And in fact, during the month of January, the EU had said that we are going to carry on with A1s, but there will be a vote so that individual states could decide if they wanted to continue with the protocol or they would not accept A1s. It actually turned out that all the EU members agreed that they would follow the protocol, and they would continue to issue and to accept the use of A1s. And the reason for this was really essentially one of equity. The idea is that the Social Security Treaty stops anyone being subject to Social Security in more than one country. In other words, you wouldn't have to pay Social Security on the same income twice, which is essentially the rule, the mainstay of the double tax agreements. So A1s are still available if you are a self-employed person in the UK and you're going to be working abroad, assuming you have the legal right to work, then you can apply still for an A1, and that A1 will be accepted throughout the EU. And the converse, of course, is true, that a self-employed person from the EU who is working in the UK can rely on an A1 and can continue to pay Social Security in their home country. The general rule is that you pay Social Security in the country that you work, but with an A1, you can do one of two things. If you are seconded, cross-border worker, and you want to stay in your home Social Security system, then the A1 allows you to do that. So, for example, a British person working in Austria can carry on paying national insurance contributions and not have to contribute to the Austrian system. The other less common scene is where someone is working in 2 or more EEA states, in which case they can pay Social Security in the country where their employer is based. And this is possible with an A1 issued from the jurisdiction of the employer. One other thing to note is that A1s are not going to be able to be extended beyond 24 months, which was not the case previously, but it is the case now. As I've just mentioned, detached workers, the seconded people, here are the provisions in the notes, and all the information is there. The when you receive an A1, if the employer, then you would simply apply the Social Security in the country of where the person is ordinarily resident, and not apply Social Security in the work country. Now, a number of clients have come to us, and contractors as well as recruitment companies, and say we're facing difficulties because our clients are not so keen to contract with a UK company anymore. And this is the reason they're given. And the reasons that we've had are various. Some we're not sure about how VAT is treated, so we're not comfortable doing it. In another case, we feel that we're in a regulated industry, and we're not sure that we're permitted to take services for recruitment from a non-EU country. Therefore, can you provide us with a European company we can contract with? Neither is genuine grounds for this view, but there is certainly a prejudice building up, which I think is likely to strengthen in discouraging people from working with European companies from working with UK companies. And it is going to be a barrier, certainly a limitation and restriction on business. And we've had a number of clients who have spoken to the UK authorities, and they have actually been advised to form subsidiary companies within the EU. Now, in these cases, the most compelling reasons have been VAT reasons or questions of logistics supply, where they have been advised to hold stocks of goods in Europe and distribute them from Europe in order to mitigate the effects of importing small quantities of goods from the UK, held up and subject to additional costs. And it is really quite remarkable that the UK government is recommending that people do this. The government slightly backtracked from this, but there's no question that their advisors have been giving the advice, which is the correct advice, that people firstly need to protect their business. And to do that, they may be well advised to set up subsidiaries on the continent. Now, as I say, the objections were not based on fact, they were based on myth. How we deal with VAT is known, and I'm going to come to that in a moment. And as far as services are concerned, since the withdrawal agreement doesn't cover services, the law is silent on this, and services are still continuing as before. And the only difficulty here is the one of equivalence. So, for example, UK qualifications are not accepted automatically from their holders post the 1st of January 2021. But if you already had a position and were working in Europe before that date, your qualifications were automatically accepted. This is a major difference. Now, there have been other areas of friction which have been limiting trade, and I'm sure you've all read about them in the papers. But give you one example that we've had ourselves recently. We have a Swedish branch of one of our UK company, and the Swedes wrote to us saying that we're not prepared to accept your directors as being suitable officers of the Swedish branch. We pointed out that the directors, who were not acceptable to the Swedes, were actually resident not in the UK, but were resident in another EU country, and the Swedes were happy with this. So it is not a question of nationality, it is a question of residence. And you may find that you're experiencing this kind of resistance as well. Now, we've also heard of cases, and this is pretty well documented on the YouTube channel of Mark Vesseling, where the Austrian authorities have suggested that UK managed companies that are operating in Austria without substance may have their limited liability lifted. I don't know really that they have a legal basis for this, but they feel that an entity set up in this way it isn't a legal entity in their eyes, and they will look through it and remove its limited liabilities. Now, the only answer to this is to form a company which is, in their view, ideally an Austrian one, but certainly a European one should suffice. Would not recommend a branch in these cases because a branch has unlimited liability. But while we haven't seen many examples, I think this is one area that we can probably expect to see grow. We've also seen companies, as I just mentioned before, refusing to accept invoices from British companies because they're not sure of the handling of the VAT. And so they've said, well, please, can you give us a European entity that we can deal with because we know the rules haven't changed there. And I'm going to come on to the VAT aspect in a moment. And you see the other 2 points here on services and acceptance of qualifications. I've already spoken about, and you can refer to this later. VAT. There hasn't been any change in the VAT legislation in the UK. And what has changed in the UK is the fact that the UK is no longer a member of the European Customs Union. And this means that it is not allied with the VAT systems of the EU member countries. So for a UK company exporting goods or services to the EU, this is now an export in exactly the same way that it would be an export to the US or to Russia might be. No difference at all. So goods and services that are exported in this way have zero rate VAT applied to them. If a UK company is purchasing goods or services from an EU country, then there will be no VAT on that invoice, but the recipient of the services will have to record the notional value of the VAT on import. That will have to appear on their VAT return, and that will either reduce the payment of VAT that's due or increase the repayment due from HMRC on the submission of the VAT return and the VAT claim. Another area which has changed, though, is that from February the 10th, it is now too late for a UK trader in digital services to register for the mini one-stop shop, the MOS system. Now, the MOS system was great for small traders because anyone who was trading within the EU needed one VAT registration or their own VAT registration if it was an EU company. And the VAT due to the individual VAT authorities, that was all sorted out and paid for via HMRC. So UK traders had from the 1st of January until the 10th of February to apply for the MOS scheme. If they did, then they could carry on in the same way as they did before. If they did not apply, and if they are now trading digital services with the EU, theoretically, they need to have a VAT registration in each country in which they trade. There is no VAT threshold, and it's not clear either how the various EU VAT authorities are going to enforce this rule, but a rule it nevertheless is. We found that yes, we've had questions about the social security, we've had questions about taxation, we've had questions about immigration, but I'm afraid COVID is still a major thing, and we have found that recently we had a case of a client who wanted to place a lot of British people into Finland. And these people had registered before the year end. They had been in Finland prior to the 31st of December, and now they wanted to go back and continue their registration process so they could carry on working. And they were limited from entering Finland because of the COVID restrictions. We'll be able to deal via our local partners with the part of the Finnish government that actually deals with the Brexit in Finland. And the authorities clarified what the process was going to be. It was extremely straightforward. They told us all the documentation that needed to be submitted. And they actually liaised with the immigration in Finland in order to allow these people in. So it isn't all bad news. There is good information out there. You simply have to find the right people to speak to. But Brexit and COVID are the two headwinds that really are hampering the international placement of international contractors. So what we're finding now is that because people become accustomed to working from home, that it's become a bit of a permanent fixture in some sectors. And people who are in roles that enable them to work remotely are finding it increasingly attractive to do this. So we've got what we have are a new phenomenon of quite a number of British people who are mainly retirees deciding to leave the EU because they cannot, without residence, spend more than 90 days in a 188-day period in the EU, in their home. And they are being replaced by people who are finding that it's actually very attractive to work remotely, and there are incentives for them to do this. So we've seen recent schemes, and they're not all EU schemes, but it's in Barbados. If your income is more than 50,000 US dollars a year, you can effectively go and live there and pay taxes there. In Greece, there was a scheme, as you can see here, of 50% reduction of taxes. In Portugal, if you purchase a property for around 300,000 euros, it's possible to get a residence permit there. In Croatia, an extremely interesting arrangement. If you can enter Croatia visa-free and your income is not sourced from Croatia, you're not selling to Croatian nationals and you're not working for a Croatian company, you can live and work there tax-free, which is just an astonishing deal. And there are more and more of these deals opening up all the time. So while you see a reduction in the number of countries that are offering passports for purchase, notably Cyprus, there are more and more countries that are offering residence arrangements for people to attract mobile, highly paid people. Well, this brings me to the end of going through the slides. I've got a question here. I'm being asked, is there a simple way to deploy UK PSC contractors for short-term assignments around the EU? 2 weeks in France, 3 weeks in Norway, 4 weeks in Lithuania, for example. We have a customer who provides specialist inspection services throughout the European region, often at short notice, with little forward planning available due to the uncertainty of their clients' requests. Well, the answer to that is no, there isn't any. There isn't any. There was a parallel, of course, which got a lot of publicity, where musicians like Bono and U2 and Elton John have been saying, what a shame it is that UK musicians can't work on short-term assignments within Europe. But in fact, it was the UK government that decided they didn't actually want this. So I'm afraid people can go, UK PSC contractors can go to Europe for tourism, and they can go for business meetings or attending conferences, but they can't go for gainful work. And I think the only answer to this one is that either the work is done remotely, if that's possible, or that you look for EU nationals who can work anywhere in the EU, or British who, for some reason or the other, have kept or can get the legal right to work in these countries. But in answer to your question, no, you can't. That is what the ending of the free movement of people was all about. Another question here. As an agency recruiter, what options are there to bring in EU citizens to the UK to work for my client on an external contract basis? Can UK umbrella companies sponsor a points-based work permit and then supply that person through my agency to my end client? This is from Philip. Well, if you want to bring in an EU citizen, assuming that they don't have a right to work in the UK, then you either the option that we have at the moment is the points-based system. Now, in order to operate the points-based system, you need a sponsor, and that's the sponsor in the application for sponsorship is supposed to engage these people directly, and is supposed to have premises at which they can work. And in the application process, the Home Office can come and have a look and see where it is that you're going to site these people. And there is no provision on lending. Now, we have heard cases where this has taken place, but reading the law, our interpretation is that this is not what the law intends, and is very, very, very dangerous. What the implications are, it's hard to see beyond, I think, rejection of the application and possibly rescinding the sponsorship that they have with HMRC. So I think the answer is no, you can't. And really, the only way of doing this is for the client to sponsor the work permit. These people, again, this is a direct consequence of the ending of the free movement of persons. What is the difference between single permit and professional card in Belgium? Are they both noted as Visa D? Should contractors, self-employed persons pay for the professional card? This is Bojan. This is a complicated question. It's beyond my direct experience. We actually have an immigration department that deals with this. But what I can tell you is that the professional card is a very, very long time coming. And I understand at the moment you're talking about 6 months or so. And this is a common factor with any of these work permits. Ever since the mass migrant inflow in Europe a few years back, the speed at which work permits are processed generally has really has lengthened. So while it is possible, and you can get a self-employed work permit, and it is possible to sponsor an employed work permit, in our experience, the employed work permit is actually easier to get hold of than to do this on a self-employed basis in Belgium. But if you want more specific information on this, I think this is Bojan who's asked the question, get in touch afterwards, and I'll put you in touch with our immigration department, and they'll advise you. Not strictly a Brexit question, but will a UK-based contractor working remotely for a client in Europe be able to claim he's outside the new IR35 rules coming into force in April? Okay, this is a very interesting question. Whether or not IR35 applies depends upon whether or not, in this circumstance, whether or not this person is a UK tax resident, in other words, a UK taxpayer. So you're saying he's UK based. If he is a UK based person, then then IR35 still applies. Now, we'd have to look at the contract chain to see if there was a fee payer there and who is responsible. But in answer to your specific point, if the person is working abroad, but if he remains a UK taxpayer, then IR35 is still applicable. Now, of course, if you have a foreign client, a a non-UK client, then they're not answerable to HMRC, and HMRC can't impose IR35 on them. If they have an associated company in the UK, then HMRC can and would. And if you are a UK recruiter, you do stand a very real risk of being the fee payer, and you would be the first port of call for HMRC in a dispute, and if the taxes weren't paid. So one thing that you can do here is, if you have the slightest doubt, you want to make absolutely sure that you are not, do not end up becoming a UK fee payer. And one way of doing it, and one way that you can be used and is perfectly legitimate, is if you've got a foreign client and a contractor, a UK PSC person who is working outside the UK, you may very well ask us or a competitor not based in the UK, so our head office is in Switzerland, to bill for your contractor and pay your contractor. We could never be a fee payer because we're not a UK organization, and you are not in the contract chain, so you don't have any fiscal responsibility in this case. I hope that's answered your question. I've got one more question. I think someone said it's the last question, but I really don't mind. With a UK resident working in Belgium, what is the process for him to apply for a work permit? Okay, a UK resident. Well, the first question is, when did this person go there? Was this person there before the end of the transition period, the 31st of December, or not? Now, let's assume that for a second that they were there. They simply need to register. They need to get onto the municipal register, and then they can stay there. Now, if they were not there at the time, then I'm afraid this has come back to Bojan's question before. They will need to apply for a work permit, either self-employed basis or an employed basis, but they will need a work permit if they were not present, were not resident in Belgium before the end of the transition period. Thank you very much. I hope this was useful to you. If you've got any other specific questions, please write into us. We'd be too happy to help. You've got the well, you know the website, but if you write to info@accessfinancial.com, then we'll come back to you as soon as we possibly can. And the last thing, I just really want to thank you very much for your time. It's very much appreciated. And if you've got any questions in the future or any other topics that you'd like us to cover, then please get in touch, and we'll be only too pleased to help you. Thank you very much indeed. Goodbye.